Good morning, everybody. This is Pete Najarian, and this is The Take on a Tuesday morning. After a interesting day yesterday, to say the very least, the markets pushed to the downside throughout the day, but there was this interesting dislocation of the markets themselves. The S&P 500 down about 1%. You look over at the Dow, down a little bit more than that, maybe call it 1.5%. But you look at the NASDAQ, and the NASDAQ actually trading in positive territory. Now, we've talked about some of these dislocations, disconnections in the past, but this one really did stand out. This was probably more extreme than the ones we'd seen in the past. Now, what was really leading the NASDAQ? Well, Amazon, Netflix, Tesla. Do you see a little bit of a theme here? A theme of risk, the risk appetite going in. These are not names that people would normally say, well, the fundamental story starts with, and all those kinds of commentary. But those were the names that were moving to the upside. Add in there a Gilead, which obviously has all kinds of different things and reasons why that stock has been moving from the downside and shifting all the way up and moving to the upside and having some pretty nice performance. But that was one of the names. AMD. Now, this is another tech name, or in this case, semiconductor name. But when you look across and you look at where the performance and the outperformance has been, oftentimes, we pointed out so many times over the last couple of weeks, the SMH and some of the movements that we are seeing there. NVIDIA, another one of those names, powering the NASDAQ as well. So when we look at the chip space and the tech space and what's really driving it, in this particular case, I brought up a biotech name with Gilead. Those were some of the kinds of names that were moving the NASDAQ into positive territory while we were watching the rest of those major indices moving to the downside. Now, one of the other areas that's really been moving a lot, and it's been a very consistent, just a chugging along and a move. We broke through 1,700 for gold, and now we've continued to power to the upside and had a nice late run as well to some of those highs where it closed just off of those highs. Oil dropped again, down towards 22.5. So you look back to yesterday and you can sort of see some of the things that are moving in directions to the upside. And you see the pullbacks on the downside. Pretty interesting. Volatility index. Now, when you look at the Dow and you see it down over 300 points, you would expect the volatility index, and we've been talking about lower 40s to mid 40s is about the range where we have been. What if I were to tell you something that was really interesting and somewhat positive, I think, is when you see the volatility index moving down with the market moving down. And that's exactly what we'd seen yesterday. We closed on the lows of the day in the VIX. So that part really did stand out, and that was pretty interesting, given the fact that it was a pretty decent sell-off, over 1%. I point out that the Dow 1.5%, the S&P a little bit more than 1%. So when you get that kind of a move to the downside, and yet you're seeing the volatility index come out, and we've talked about the contraction of the move, and then we've seen more and more of that, this contraction of the move of the markets intraday. And that's something I think that, as we continue to track that, you're going to see volatility coming in that much more. So what else was really negative yesterday? Cruise lines, airlines, transportation, Caterpillar, all pulling on the markets, but really financials. When you looked at the financials yesterday, down about 3.5%, a little bit more than that. You look at the regional financials, down in 5.6%, really pressuring on an area that has been one of those that it's nowhere near where they had been, many of these stocks, but they've been chugging along and cutting into some of those losses that they've had, but still well off the highs. And I've tried to point this out on many occasions where a name like Bank of America that was 35 and you drop all the way down under, the low 20s, 20, and then here we are now, you're still trading. Yesterday it was around 25. That's still well off those January highs where we were. So has it come back some? Yes. Have the financials sort of battled back? They have a little bit, but certainly there's a lot more to go from where they are right now. Now, names like JP Morgan yesterday, Wells Fargo, Bank of America, we're talking about some of the very big banks with a little bit of pressure yesterday. So we all know the Fed action has been something that has been there for us. And Mike Wilson over at Morgan Stanley has done a great job. He and Tony Dwyer. Tony joined us yesterday, as a matter of fact, on our roundtable discussion, because Tony has been so right on these markets. And he has continued to be and did a great job with us yesterday. I would encourage you to maybe take a look back, and if you get a chance to, and look in the archives and try to see that on Market Rebellion site, because that was a really great roundtable and Tony gave us a lot of his great insights. Mike Wilson's another one. Fantastic job. Now, Tony's at Canaccord. Mike Wilson's over at Morgan Stanley. Mike Wilson does an outstanding job. as he does his analysis as well. And one of the things he said was, hey, look, the Fed has our back. He is so right. When you think about it and you look at some of the dramatic moves that the Fed has had to do over the last, call it 3, 4, 5, 6 weeks, and some of the movements that we are seeing, they do have our back. And that's something that a lot of the bulls now, or guys that are getting more bullish, that's where they're sort of hanging their hat right now. So the leadership today, well, just take a flip from yesterday. I'm looking at it right now. You got cruise ships, you got airlines, you got some transportation. I'm looking at the NASDAQ, which is absolutely outperforming right now. Now, this is a market this morning. We were up 500 plus points very early. I mean, right out of the gates, we were moving to the upside. JP Morgan was one of those names moving to the upside, very strong, had their earnings and what they're doing with cash. And everybody knows that it's going to be very murky and very complicated. So I think a lot of people are willing to look past that. But at the same time, there is still some nervousness. And when you wonder why, when we were up 500 plus points, almost 550, 560 points, why are we up now 300 points? Still a nice gain, but cutting it almost in half from where we were. We're up about 1.3% right now in the Dow, but the NASDAQ's up 2.5%. We continue to see the NASDAQ just with this powering move to the upside. One of the names that is at least helping the Dow for sure at this point in time, J&J, another one. We talk about earnings. We talk about trying to look under the hood of some of these companies. Now, one of the things that I think is really hit a lot of people in a positive way with J&J was the fact they said, hey, look, yeah, we've got this issue, we've got that issue, we're raising the dividend. Now that says something about the confidence levels of them at the company right now. Was everything perfect in their report? Absolutely not. But I think there was a comfort that was brought by J&J by the moves, because they certainly wouldn't want to make those moves if they didn't feel comfortable with them. But by those moves gives people a little bit more comfort, at least for now. We'll see how long that lasts. Now the volatility index, we're down about 6%. We are back down, guys, in the 30s. We are in the upper 30s right now for the volatility index. And I talked about how we closed on that low yesterday and how you can almost interpret that into being a little bit more of a bullish sort of a tone when you've got a market that's down 300 plus points and you got a volatility that's following along to the downside. What's still working? I brought up gold and I've brought up oil. Gold continues to work to the upside. It's that stair-stepping move to the upside that we've seen. And oil just continues, even with the moves that have been made and the conversations with Russia, with OPEC, with the Saudis, all of that. I was last looking at oil. I think it's trading somewhere in the low to mid, 21 and a half, somewhere in that range. Now, I love to give you guys an unusual option activity, and this one's going to be a little bit interesting and unusual because as much as I like some of the paper I'm seeing today, right at the end of the day, right when the bell hit, we had some activity. I just brought up gold. And what did we see? We saw GLD. We have been watching this roll from GLD now for probably the better part of 5 or 6 weeks, where it's just been a constant roll, roll, roll. Now, we've talked about some of the miners. I had unusual activity not too terribly long ago on the take where we talked about GFI. That stock has taken off to the upside. That's gotten up and over 7, a nice big swift move. But GLD, this constant roll, the constant roll, the constant roll. The May 161s were a call that was bought not that terribly long ago. 18,000 of those were sold today because the profits are there. So they were sold today, and the buyer of those decided to sell those out, but they still want to be in GLD. So they bought 18,000 of the 168 calls for somewhere near the ballpark of $3. So this is a very expensive trade. 18,000 of anything is going to be pretty costly, but 18,000 and you're paying $3. That's a pretty big trade, folks. And that's what we were seeing right at the bell yesterday. I thought it was important. I just wanted to let everybody know and understand some of the things that we are seeing. And that got up there right as we were closing yesterday. So something that kind of feeds into today as well. Now, it's been a really, really interesting time off. I've had a great time over the last couple of months. I'm going to continue to be doing the takes and all the rest of that. And I will be on CNBC, the halftime report today at noon Eastern. So it should be a lot of fun. We've got some great guests on there. Lot to talk about. We finally got into earnings season. Excited about that. Guys, this is the Market Rebellion. This is the place you go for education, understanding of the derivatives world. We continue to be on fire. We talk about these volumes and how extraordinary they are. Heck, right now, when volumes actually pull back a little bit and they feel like, wow, we've maybe dropped in volume, these would still be on pace for record volume pace. And right now, we are certainly on that for 2020. The pace in which the volumes that we are seeing is absolutely extraordinary. You need to know about that pace, and you need to know more about the options, how they work, all the Greeks, all of that. Got some great educators over there, and we do a lot of stuff where we're doing like these round tables, totally free. Just an opportunity to hear what we're seeing, what other folks are thinking and seeing, and it's just a great opportunity. That's all through the Market Rebellion. Folks, have a great day. My guys over at the Minnesotan, the shirts are coming, the hats are there. We've got the take, we've got giddy ups, we've got the bull, we've got all kinds of great stuff. So those hats are already there. Shirts are coming next. And we got a whole bunch of different shirts and a bunch of different ideas that are going to be very exciting. Have a great day at trading.